We are going into a huge recession. Here's how I know. We just got our 1099s back, so I'm going to show you what a bad year at the Mustang Ranch looks like.
This is Dace. She's a sex worker working out in Nevada. She recently posted a video where she reported that her income dropped 64% this past year and makes the prediction that a huge recession is coming. You're probably asking yourself, why are we bringing this up on an investing channel? Well, it turns out sex workers might be surprisingly good at predicting market corrections. In 2022, Twitter user Botticelli Bimbo, yes, I just said that, correctly predicted the economic decline that we saw later that year. Economists have taken note of this phenomenon, and they've even dubbed this the stripper index. In this video, we'll take a look at the veracity of the so-called stripper index to see if there's actual truth here or not, and to see if there's an impending market decline. And then we'll move into some portfolio updates and finally conclude with a deep dive on Lululemon, whose stock price was recently crushed. The theory is that when an economic recession is approaching, people tend to prioritize basic necessities over luxury expenses. Since the sex industry is the utmost of discretionary expenses, the thought is that sex workers can sense this reduced spending earlier than some other macroeconomic indicators. As labor economist Sanya Khan told Glamour magazine, when people have less discretionary money, going to strip clubs isn't an immediate necessary thing that they have to do. In recessions, people are spending more on the things they need, their bills, food, energy, gas. This sector of the economy is called non-discretionary spending. So, what can Dace's prediction tell us about where we stand today? And more importantly, can we back it up with data? Unfortunately, by the very nature of the stripper index being an anecdotal indicator, we actually don't have a lot of options here. Looking to the public markets, the largest strip club conglomerate is a public company called RCI Hospitality, which I couldn't find any correlation between their performance and the market performance. If we look at more traditional macroeconomic factors, like the Consumer Confidence Index, jobs data, or consumer spending, we don't really have any indications that a market correction is imminent. There are certainly some signs though, and Dace points them out.
There are people I've met that I cannot tell you about, and things I've heard that I can't repeat. But if my 1099 shared with you from last year was not enough for you to see the writing on the wall, let me share with you these things that I can. Bezos cashed out $8.5 billion in 1 month alone. The CEO of JP Morgan selling for the first time ever. Leon Black also selling for the first time ever. We got Zuckerberg out here selling the Meta stocks too. Walton family selling $1.5 billion. But wait, there's more. No, really, I could keep going.
But that doesn't mean that the stripper index is entirely useless. When I hear things like this, or other anecdotal indicators like the shoeshine boy indicator, I treat it like I'm hearing a funky noise in an engine. If you're curious about the shoeshine boy indicator, we actually talked about it in one of our last videos. We'll be sure to link it here in case you want to check it out. The funky noise in the engine example is pretty useful. If you were driving down the road and you heard a funky noise in your engine, you'd pull over and you'd investigate it. If you hear a sex worker talking about tips drying up, or anyone who works in a strong discretionary spending environment starting to struggle, then collect that data point and go check the engine. If we take a look at the economy, as of right now, there are no bleeding indicators that a crash is coming. We support Buffett-style investing, and it's his belief that you should never try to time the market. The fact of the matter is that no one knows when a crash is coming. But when people start claiming that something might be happening, it's worth it to stop and check their claim. I remain agnostic on whether or not a market crash is coming, but I do know that valuations seem high. I'm having a difficult time finding wonderful companies trading at fair prices. If we take a look at my public portfolio, I'm sitting on a lot of cash equivalents right now, mostly short-term government bonds. I took a position back in Disney. It was only about 5% of the portfolio, and it's done pretty well since then, but I'm searching really hard for my next company. So, where am I looking? Well, I get excited when the prices of my favorite companies start to fall. I consider this a sale, so long as the reason why the stock is going on sale isn't for too bad of a reason. And one of my favorite stocks just went on sale. Let's take a look to see if the sale price is deep enough to warrant a buy. This company is, of course, Lululemon. Let's dive into some analysis. The very first step in analyzing a business is to understand how they make money. Fortunately, this is pretty easy for us in the case of Lululemon. Warren Buffett himself says his favorite companies are simple businesses. To understand how Lululemon makes money, we head to the annual report and head to Section 1, Business. And it's pretty clear here how Lululemon makes money. They sell performance apparel, footwear, accessories, all marketed under the Lululemon brand. They also have a small technology arm with their brand Mirror. And it's interesting, 65% of their customers are women, so there's a good ability for them to continue to grow out their men's apparel, which they call it in the annual report as a targeted advertising play, which leads into the next part of understanding the business, which is to understand how it will continue to compound long into the future. And they do a good job of covering this in the annual report. They outline their growth strategy in their Power of 3x2 plan, which calls about their 3 key pillars of growth and how they plan to double their revenues by 2026. Coincidentally, they've already doubled their revenue since they created this plan back in 2021, which is also a great sign. We love when management hits their goals. Next, we'll take a super quick look at Lululemon's financial health. Going to their income statement, we look that growth is slowing down a bit, but their COGS is slowing quicker, which we like to see as gross profit margin goes up. All this results in net income going up pretty solidly. Their balance sheet is also very solid, with $7 billion in assets and $2.8 billion in liabilities. Their cash flow statement is also really great, with $1.6 billion in free cash flow and a healthy amount of stock buybacks. Lululemon is a cash volcano. So overall, the company is very financially healthy and they have a solid plan to continue to grow. There's a lot more research I have to do around evaluating management, and I'm going to continue to do that research and hopefully watch the stock fall a bit more before officially throwing my hat in the ring. I think that Lululemon's brand value is incredible, arguably one of the best in the world, but they need to protect that brand and not take the short-term payoff to prevent a bad quarter by dropping prices. In all, I think the stock was overly punished for their weak forecasting, and I'm strongly considering taking a position in the company. That's all for this video. If you liked it, please like and subscribe. We release new videos weekly that dive deep into investment analysis. We'll see you next time.